amazed at just how little it's going to cost to bring this copper mine to life. Here to tell us about the Dianne Copper Project in Far North Queensland is Pat Williams, the Managing Director for Revolver Resources. Pat, it is a pleasure to see you. How are you?
Hi Shay, Happy New Year.
Happy New Year to you and probably for Revolver Resources investors. Listen, mate, I want to draw everybody's attention to what you called a recommencement study happening over at your Dianne Copper Project in Far North Queensland. Pat, normally when we're talking about these things, people use words like PFS, DFS, BFS, any other annoying acronym you can think of. Why are you using the words recommencement?
That's really what we're doing, Shay. We're bringing this mine back into production. It was a conscious decision we made 18 months ago. We've added the facts, figures, details, studies, engineering. We've done all of the work we need to do, and for the fairness and the education of the market and our shareholders out there, it was time that we brought all that together, put it in one document. So it's the final step before recommencement. It's a very comprehensive study. We haven't left any stone unturned, and it really puts a compelling proposition out there. And it's the first time, Shay, we haven't really communicated clearly and concisely exactly what this project represents. And I think everything in that is a compelling story. It's a very compelling reason that I hope the shareholders now understand what we're doing and what the size of the prize is.
Well, I encourage current and potential shareholders to review the document. It is quite hefty in size, but as you said, it's quite detailed. Like, you've put forward all the information that you've got. Speaking all the information that you've got, and I sort of started today's interview here, it's going to take, $30 million to bring this mine online. Mate, that's an awfully low number. How can you do it so cheaply?
Oh, look, Shay, that's just the nature of the project. You know, we've copped criticism even, lots of commentary about, it's too small. What we've developed is a fit-for-purpose, right-sized project that commercialises the known remaining ore body. It is small, Shay, but, good things come in small packages, as my dear mother used to say. So, we haven't gold-plated it, we haven't oversized it. We're building a 5,000 tonne per annum cathode plant on site to run for 3.5 years. That's it, and we will aim to get as much second-hand equipment as possible. We'll go to the thrift store, we'll buy what we can that makes sense. We'll be frugal in the way we do it, but effectively $30 million gets us steady-state revenue. So it's 20 to build it, which is basically, 2 10s. $10 million worth of bulk earthworks, really hard to get that wrong. And the second 10 is the process plant, a cathode plant. Been doing it for, decades. It's tried and proven technology. The test work that we've done, and there's evidence in that report, we've got a really high recovery, copper ore. So we're excited about a simple process working very robustly. 2 10s to build it, another 10 to operate it. You've got to, stack a leach pad, you've got to irrigate it, you've got to commission and run the plant, you've got to operate equipment. So we'll be operating the mine for a number of months until we start plating cathode on a regular basis. So 9 months, $30 million, and we start putting out cathode every month, for the next 38 months. So, exciting story, and that's a part of the attractiveness, Shay. It doesn't cost a lot of money. It shouldn't cost a lot of money. It's a very short time frame, and we'll be out in the market. Another feature to the overall profile of the project, commercial attractiveness, the very small cost base that it will take to get into operation. That's why we're looking for as much debt as possible. So we've taken a little bit longer. No longer does it make sense to equity fund this project because we've taken all the risk out of it. Okay, it's ours for Revolver, it's ours for the shareholder base, and we're closing out some final stages of funding to have the entire project funded, not just a little bit at a time, so that we can get going and build a copper mine.
Well, speaking of getting going, look, it's a great market to be feeding copper into. I'm not going to lie, but I know you talk about the small tonnage per annum, but I think there's a big, impressive number that we should draw everybody's attention to, and that's a $125 million in pre-tax free cash flow. Is that correct? Because that seems quite a large number that we should be paying attention to instead.
Oh, Shay, that's the size of the prize, and really, if anyone's ever run a business, that's the only metric. How much cash can you pull out of this thing in the quickest possible time frame? So, and again, you'll see that's even been modelled at 10,500 US a tonne for copper. We pushed past 13,000. We're just trying to be, sensible. Middle of the road. We've used a comfortable commodity price number, but this thing is a cash cow, and that's really the stepping stone that Revolver sees. Capital markets are bumpy. They're on one day, they're off the next. You can get a little bit of money. You've got to give away a lot of discount. We've really approached this project with the shareholder benefit in mind. We haven't taken on any crazy dilution. We've still got less than 300 million shares on offer. And we're reaching out to commence a project that by the end of this year will be generating revenue on the pathway to 125 million free cash or more if the commodity price keeps going up. So it's a great story, and it is a really exciting time for us to be doing what we're doing.
It certainly is. 2026, the year Revolver may enter production, which is super exciting. Listen, Pat, it's been great catching up with you today, and I look forward to future updates.
Thanks, Shape. See you later. Hank.